Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Glmr. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be in the top right-hand corner of the video. And I also have two donation links down below in the description if you want to support Ukraine and the Ukrainian refugees. Feel free to go over to the official websites and donate if you would like to do so. Anyway, thank you all for supporting Ukraine and for supporting my channel. Let's get on with the video. So jumping into the daily chart on TradingView, as you can see, I have the exact same Fibonacci retracements as I did in the last video. So we have our swing high. Oh, okay, the brush seemed to glitch out for some reason. So we have the same swing high and the same swing low from the last update. And right now we have broken below the second fib level. So these were our extension level targets, and the second level was our capitulation target, but we managed to break down even lower than that. And in case of another capitulation, which could arrive here in September, to be honest with you, things could absolutely get worse. So be ready with your fiat like I am, not a financial advice, but I will be ready to buy the next, strong dip that we're going to have. So the major support level here would be at 38, let's say 39 cents roughly, because that is the 2.272 Fibonacci retracement level. Now, based on the smaller fib that we have over here and this one, let me just show you the swing high and the swing low. So the swing high is right over there, July 30th, and the swing low is over there, July 13th. So with these points of contact, I was able to get the extension levels to the downside if we lost this low that we created in July. And that's exactly what we did. So our immediate support below is at 48.4843. So this is the level, the 1.272 that we're going to be targeting here. This is your minimum target. Obviously, the 1.618 is going to be your technical target. This is where you are probably going to end up, right? If you continue this way, you break through the 1.272, then I would say we're likely to reach our 1.618 target. And after that, that would potentially be our bottom here, right? So this could be our bottom if we have another capitulation. You also have the 39 cents level down below. So what you could do just to ease things up is just create a buy zone. So you simply add a buy zone in between these two levels, and that will be the levels that you will be targeting. So the bottom is the 2.272 of the large fib, and the upper level is the 1.618 of the smaller fib. So let's see if these targets can be met. If we do see a capitulation, definitely be ready for that. Also, the 20 EMA would act as a very strong resistance if we start a relief rally in the next couple of days. But with the stock markets opening up tomorrow, on Tuesday, I do think we may see a little pullback because obviously today is the Labor Day and markets are not in a trading mode, so to speak, for S&P 500. So when the markets open up, I do think we're going to see a bit of a pullback. And I would imagine that would go over into the crypto markets as well because they are heavily correlated, whether you believe it or not, but they are heavily correlated. Now, I would hope we will see a decoupling in the next 5 to 10 years, but for now, the Bitcoin and crypto markets are heavily correlated to the S&P 500. Now, looking at the pattern here that we did have, so we were in a rising wedge. This was a bearish pattern. This was a bearish continuation pattern to be exact, because we were in a downtrend. You enter this pattern and then you break to the downside from it. So that's why it is a bearish continuation pattern. So as you can see, the technical target was met. So the technical target here was at 58 cents. That was met perfectly here. And then some. We dropped back down and now we're hovering below 52 cents. So this is a very good buying area in my opinion, because this is lower than we got in June. This is lower than we got here in July. So if you want to dollar cost average into your positions, this is a very, very good spot to do that in my opinion. You can also set up some buy limit orders all the way from the 1.272 to the buy zone that we talked about earlier in the video. Now let's jump into the daily chart here on the RSI. So as you can see, we nearly bounced from the blue trend line here that we have bounced from in May and in June. So look out for that trend line to be a major support level. If we lose that, obviously, then that is a major sign that we could see even more downside in the coming days. So be wary of this blue support trend line. If you see the RSI come down to it, that would be a good entry point for me. And if you see this trend line lost, just buy some more below, because after all, even if you're, buying off of the trend line or not, you're still in the oversold if you're below the index of 30. And right now you're a bit far away from the oversold, but still you're very near to it. I could also bring out another trend line here. So as you can see, this would indicate that we have some sort of a symmetrical triangle here, and we have lower lows, or I should say higher lows and lower highs. So basically you are in a symmetrical triangle, and at some point you're going to see a break either to the upside or to the downside, but hopefully we're going to get a break to the upside, right? Because that's what we all want, but there are no guarantees in the crypto markets. And there is a very high possibility, or probability, I should say, that we're going to break to the downside, because a lot of bearish events are going to be happening during the month of September. We're going to get the inflation data, we're going to have the FOMC meeting, and we are having the ETH merge. And the reason the ETH merge could be bearish is because the Bitcoin whales could probably start dumping the market, so that ETH doesn't perform that well. There's also a possibility that that could happen. So be on the lookout for a dip and be ready with some cash. I want to switch over to the Binance website. So moving over to the Binance website, as you can see, we lost the swing low here that we printed in July and in May, and we're dropping out of this fib retracement. So this fib retracement is no longer what we're targeting. The 1.618 is gone for now, although we still have this resistance levels above us from $1.10 to $1.05, because this is the bounce that we got in May from this area. So this is still a level that we haven't back tested as resistance. Now I have given you the support levels below, and I'm going to remove these price tags. Now let's see what resistance levels above we have, so that we could see what are the targets, what are possible targets in case of a relief rally. So obviously here, 65 cents. This is a pretty good target to take some profits if you want to swing trade, but as always, be careful with swing trading. If you're not comfortable with it, don't do it. Don't force a trade. Never force a trade, guys. Only swing trade when an asset is oversold on the daily or on the 4-hourly, 12-hourly charts. And next up, you have another resistance level over here based on this high. So I'm going to bring out the arrows so that you can see which points of contact I am using. So as you can see, 57.5 cents is another resistance level, and we have actually wicked towards that level. Haven't gotten to it, but we wicked to that level September 2nd. Obviously, the 20 EMA is a major resistance level you want to keep an eye on, and that's regarding the local bottoms that we have here. If we take a look at some resistance levels or some local highs, then you have another level over there. That would be 70 cents exactly, and you have another resistance over there, and that's a very strong resistance level. That resistance level held us down so many times. So that's just around about 76.5 cents. So you have multiple levels where you could take some profits if you are looking to do so. If you want to load up over here and take have 4 sell limit orders, so that's 10.5% trade, 24.5% trade, 34.5% trade, and 47% trade. So you could have a nice opportunity here to stack up some GLMR tokens and take some profits at these levels, and then potentially wait for another pullback and buy back in if that's what you're looking to do. Or if you're looking to simply buy here and take profits at these levels just as a normal trade, that's also possible. So many options for you here, but as always, be careful with swing trading. I want to say that we're very near the bottom, guys, but things could get worse, right? If we have a full-on recession, which technically we are in a recession in the US, but I'm not in the US, it's just that we're talking about the US recession currently. So if that goes into fruition, then the markets could see a very, very strong pullback, and we could see something along the 2008 dump that we got. And the S&P 500 is not performing very well on the monthly chart, so we'll see how things go. And that is pretty much it. If I missed anything important on the charts, please let me know down below in the comment section. Like I said, very negative stuff. We're losing our swing lows here that we printed in July and May. We're coming below that, back testing it as resistance. This is quite negative, so we'll see where we go from here. Definitely more room to go down, so be ready with buy limit orders. Thank you all for watching. Feel free to follow me on Twitter. Feel free to join me on Patreon. I'm going to catch you in the next one. Goodbye and good night.